Stock trading and Forex. Today, there are so many forms of trading, but two of the most viable for people are the stock trading and the foreign exchange or Forex. For you to understand which one would suit your preference best, it would be good to understand the difference and similarities between the two before you make that final decision. In stock trading, the first thing that you need to understand is what stocks means. As defined, stocks are the smallest unit of ownership in a company. Here, since you own a share of a company's stock, you are a part owner of the company, thus, you reserve the right to vote on members of the board of directors of the company as well as in other matters concerning the company. There are actually two types of stock, the common stock and the preferred stock. The first type is the kind that mostly held by the majority of individuals, while the other is just like the first type, only that it restricts you to have more freedom than the former except in the dividends area. Forex or foreign exchange refers to a market wherein the different currencies in the world are circulated. Simply put, Forex refers to the market where one can find almost all currencies across the globe and gain profit from it. In Forex, all of the global trades are routed in a real time. Here, the transactions for goods and services are done 24/7 all over the world. These transactions for specific kinds of services and goods are usually done across the national borders, thus, requiring for non-domestic currencies as payments. Some people often confuse the stock market with the foreign market. This is because they think that they both have the same operations and functions in dealing and transacting business. But, there are big differences between the two. A good trader must know it at heart to be able to deal with the challenges in the Forex and came out triumphant in it. The major difference. Experts say that is very important to understand what sets Forex apart from other types of market out there. People who are planning to get into it should familiarize themselves with the structure of the Forex to be able to come up with strategies and approaches that will create an impact to the market and will generate a lot of transactions across the globe. The first thing that sets Forex apart from other markets is time or the time frame. Experts say a good trader in the Forex should know that this industry is the only industry that literally runs 24 hours a day and 7 days a week. This understanding will lead the trader to come up with various techniques and methods to make transacting easier, efficient and good results. Another thing that sets Forex apart is the absence of exchanges. In the Forex, there are no exchanges in terms of transactions, but there is what they call the exchange-based Forex that usually come in the forms of futures. Where Forex transactions are done is what also sets Forex apart. Unlike in other markets, the transactions in Forex trading are coursed through the interbank market, wherein the bank itself will directly handle the financial transactions coming from various local and international dealers and brokers. Over the years, more and more people are fascinated and interested in getting into stock trading and Forex. This is because they are now seeing how viable and profitable the process could be. But of course, this can only be beneficial to those who understand the market very well.